Hello, everybody, and welcome to episode 21 of Bank to the Future Live. We are, again, experimenting with different formats, and now, if everything is working as it should be, you can either be watching this on Facebook, on our YouTube channel, or on Twitter Live, and hopefully that's all working. I'm also very happy to announce that if everything is as it should be, the internet connection should be solid this week, but I don't want to jinx it. The connection should be really good. We've got a new satellite installed on the side of the building, dedicated secure connection, and I've tested uploading a few things on YouTube and it's zoomed right through it, pardon the pun, here on Zoom. So let's jump straight into episode 21 of Bank to the Future Live. The premise of this show is that we have a lot of investors that might not necessarily be comfortable asking about such terms. So the goal of this show is that we're going to pick out many of the terms that people often ask us in the support or in different places, and actually answer them so that you don't need to ask that. But if you are comfortable asking and you'd like us to go through a different concept, a different term, then I'll endeavor to go through them. And Famida is back online and she's going to be picking out some of the terms that we get either through YouTube comments or live stream or any of the social networks where we can try and find all this in a kind of a chaotic environment, but we'll try and organize it into something. So, what am I going to do first? So just heading over to the show notes quickly. And the first thing we're going to do is just go through some of the new pitches live, some of the new updates. Then we're going to cover some portfolio news on updates on some of the companies that are in the portfolio at Bank to the Future. And then we'll head over to some of the terms and we'll try and end with some more general Q&A and see where it goes next. So I think we can probably do this where I stop sharing. I'm going to share my screen and then stop sharing my video is the idea. Okay, great. First thing I'm going to go through is just some of the general updates at the moment on Bank to the Future. So for those of you that are new or unfamiliar, if you're watching this, then whenever you head over to the Invest tab on Bank to the Future, you see our new offerings. We tend to have no more than 1 to 4 offerings at any one time, sometimes more, sometimes less. But we've recently just closed the Kraken deal, which I think is further down. For those of you that are asking about when the status is going to change on Kraken from pending, we're going to be doing that at the moment. We've cancelled all uncleared bank transfers for the Kraken round. We had over 2,000 investors, and we're just pulling together all the final numbers. And in the probably next week, you'll start to notice some change in the portfolio section of your account. And once we close the legal work, you'll be able to download your share certificates there as well. Currently live on the platform is CoinFirm. Now, CoinFirm is an interesting one. You might not be terribly passionate about things like know your customer and anti-money laundering, but the fact of the matter is our industry is currently being put under the scrutiny of some of the same standards that banks have to adhere to by new announcements from the Financial Actions Task Force. And what that means is that it's going to be compulsory for exchanges to know more about their clients and provide such data between exchanges, and also do scrubbing on wallet addresses like Ripple, Ethereum, Ethereum, and Bitcoin, of course. And CoinFirm has been in the industry for a while, and they have been ahead of that curve because they provide just those services that exchanges need. And they've just started providing their data and scrubbing services for XRP as well as BTC and ETH. So CoinFirm is now live on the platform. They're just about to hit their minimum funding goal. So the first thing we can share with you is how to actually read this. Let me move the screens in case. Oh, That's not what I wanted to do. That's me playing my own video, but let's go back over here. You can see some of the different things. I'm just going to move that screen. I'm not sure if it's different for you or me, but you can see here that on every pitch you have a funding goal, and that's the total amount that they're going to be selling. Sometimes once it hits the funding goal, companies decide to sell more equity, but it doesn't ever dilute the investor. So what that means is that once it hits the funding goal, let's say they're offering X percentage of equity for $1 million, and then they decide to go over funding, then it doesn't mean that you'll be diluted. It just means that the company's going to sell more equity. And in order for the deal to go ahead, they just have to reach this minimum funding goal here, which is displayed. This particular deal is not an equity, it's a convertible note, and we'll go through some of this jargon as we go through. So CoinFirm is just about to hit their minimum funding goal, and then it will go through to the total funding goal, hopefully, if all goes to plan. So CoinFirm is the only deal live at the moment. We've got many more for you that we're just going through the due diligence process and getting signed off. In terms of the secondary market, it's starting to get a bit fuller now that we're in beta. So if you head over to the trade tab on BnkToTheFuture, you'll see the deals where you can buy and sell shares in some of the most established companies in crypto via one of our SPVs. A whole load of jargon there, but we're going to define many of these things and many of these terms as we get through the next section of BnkToTheFuture Live. You'll notice two new secondary markets, which is the BitPay SPV and the Kraken SPV. For those of you that just invested in Kraken, you're still subject to the lock-in periods, depending on your country of residence, so you can't sell on that market yet. But once those lock-in periods are through, you'll be able to place sell orders should you choose to do that. But for now, as long as you're not from the US, you can place a buy order and go through putting a bid in for any of these companies through the SPV. We just launched a BitPay and Kraken, and that joins our Ripple Labs SPV, our Circle SPV, and the most commonly and most frequently traded is the highest liquid is the Bitfinex SPV, which has been on a bit of a roller coaster ride since it's launched on our beta secondary market. You can see the price history here, and you can see the volume as it's trading, and you can see a history of all the trades and get further details on the company. So you can find out a bit more about the valuation and some certain details, or you can head over to the company page where it breaks down a bit more history of the funding round, the team. Also, anyone that's a qualifying member of BnkToTheFuture can post in the discussion forum. This is open to non-investors, well, anyone that's registered with BnkToTheFuture, but not necessarily an investor in this company. And then the investor zone is just open for existing investors in the SPV. And then you can head back to the market, obviously, and see the data there. So we're filling it up. We're still in beta, obviously. We're going to be coming out of beta. We're forecasting around about September. That's when we'll be able to open up to deposits on the BnkToTheFuture platform that are not just, at the moment in beta, we're just using Tether, USDT. And the reason we're doing that is because we want to attract a more of a sophisticated audience that's more used to crypto in the initial phase in beta to kick the technology. And we're really happy with how that's going. But then we'll be opening up to more once we open up the fiat deposits and we come out of beta. Another thing I wanted to show you is something we've been working on. It's not ready to go live and share with you just yet, but I want to give you an idea if I can find it. I think it's hidden behind one of these. Here it is. We're just launching a new Trello board that our marketing team has been working on. And this is designed to give you some of the history and also some of the forecast and roadmaps, so that at any time you can see what we've actually been working on and what we will be working on. And you can actually, if we can get everything to work how we want it to go, you'll be able to cast your vote on certain features that you would like to see at BnkToTheFuture and help us communicate to you when your feature is not really coming through, you'd be able to visually see some of the things that we're working on, and also whether that's a popular feature that other people would like to see as well. So we're going to be releasing that in the coming weeks as well. And now I think is a good time to head over to some of the portfolio news and start covering some of those stories. So one of our portfolio companies, Coinbase, it was covered that they're in talks to launch its own insurance company. Very interesting, because insurance has been one of those protections that people would expect to have in place when dealing with a financial institution or a crypto company. However, as the new traditional financial world adjusts to the new crypto world, it's very hard to get things like insurance coverage. And I'm sure this is playing into part of the fact that they're doing custody. And therefore, if you're putting your crypto assets in custody and following the protocols of storing them, then they're growing comfortable offering some kind of insurance service. Again, this is not something that's been confirmed. This is just publicly available information on some of our portfolio companies. So you can read that on Coinbase. Also, revenue from the token distributions of Leo. So Bitfinex is starting to actually buy back some of those tokens based upon revenue. So we did an SPV that gave an allocation in Leo, the Bitfinex token, and they've started to make some distributions. So that's good to see. Also, the latest filings from the New York Attorney General Office. I gave an update on my personal Twitter profile on this morning. Those are my personal views, not those of BnkToTheFuture. But my personal views on some of these situations. But it's a really interesting development at the moment. Obviously, the New York Attorney General Office and Bitfinex and Tether are in a bit of a dispute at the moment. We've been giving disclosures on that, on the publicly available information. And if you head over to something like the discussion, then you can see some of the documents that we've disclosed on the situation as public information becomes available. But they're in that dispute, but now it's becoming a jurisdictional issue. So one thing that's become a pretty interesting development is that the New York Attorney General Office is stating that Bitfinex and Tether have not stopped servicing New York-based customers because other exchanges, i.e. Poloniex, which is owned by Circle, another one of our portfolio companies, uses Tether as a trading pair in their crypto-to-crypto exchange. And because Circle has a bit license with the New York, then obviously they share the data with New York, and they're using those IP addresses and data that Circle obviously has to share as a result of the acquisition of Poloniex in order to determine that New York customers have been using Tether, and therefore anybody using Tether or the New York Attorney General Office is trying to use that in order to gain jurisdiction, in order to gain access to more details. Very interesting development, and has big impacts and big consequences on Facebook's cryptocurrency, and also why people might start to use Bitcoin as well. So very interesting to see that. But yet the case still continues with Bitfinex and New York. A couple of updates on the blog. Again, this isn't, I always say this, it's not really clear and it's pretty hidden, but one thing we're doing at the moment is integrating our blog with Medium, because that's a popular channel for people to find out more. We've noticed that we're posting quite a lot of blog updates. The way you find it is by going over to the blog tab in the footer. And people are not really seeing those, or things are getting lost. So, but if you head over to the footer and blog, we'll try in the upcoming releases, make it more clear where you can get that news. But we post all of the news almost daily on the things that are up to, what's happening next, whenever we go live, and some of the updates there that are happening at BnkToTheFuture. So check that out. The last one was around the new deals that are going live. But also remember, if you're a premium member of Bank to the Future, which means that you hold a minimum of 10,000 Bank to the Future tokens, Bank to the Future tokens can be purchased on a range of cryptocurrency exchanges, including Bitfinex, ETHFinex, Gate.io, Upbit, Huobi Korea, various other ones. Try and do this live, but in order to get an update of where you can actually purchase these, head over to coinmarketcap.com, type in BFT, which is a ticker symbol for the Bank to the Future token, and you can see full details here. Here's just an update on price, ranking, and volume, and various other things. But head over to the markets tabs, and you can see the different cryptocurrency exchanges that allow you to buy and sell Bank to the Future tokens. Obviously, we have no control over that. It's an ERC20 token, which means it's built on top of Ethereum, and it's open source, and anyone can any of those exchanges can integrate with that. And so that's how you find the latest data. But remember, if you hold a minimum of 10,000 Bank to the Future tokens, you've got a couple of options. You can either go over here to the BF wallet, download the BF wallet on either iOS and Android, and you can remember this is a self-custodial wallet. So again, I guess we're going into some of the terms and jargon, but self-custodial means that you own it. It's kind of like having cash in your pocket. You own the private key. If it's your private key, you own it. We can't control that. But you can connect it with your BnkToTheFuture.com account when you log in and download the app. And then if you hold 10,000 tokens in your possession, Bank to the Future tokens, you become a premium member, which means you get priority access to deals. But also, if you head over to the fund section on your account, you can deposit them in a custodial way, where we hold them. So you can just deposit them right here, click deposit, send them across. You just need to disclose the wallet you'll be sending them through, and then we'll match those up. Also, if you send more than 10,000 Bank to the Future tokens, you can use them to pay trading fees on the secondary market. And if you pay your bank to your trading fees on the secondary market when buying and selling with Bank to the Future tokens, you actually get a 50% discount off your trading fees. And most people take that option when actually trading on the secondary market or buying and selling on the secondary market. So those are all the news. Those are all the updates that I had for you. Let me just check I've got all those. And we started to cover some of the jargon, but now the goal of the next half hour is to go through some of the terms that we think every investor that's using Bank to the Future or is investing in the crypto space or is building a portfolio of crypto companies should be aware of. And I'll try and go through some of the places where you can get more information on these things when using the Bank to the Future platform. So, Famida, should we head over to you? And remember, if you want to use the hashtag BFLive of any terms you'd like me to go through, then we can go through them. Or use the Telegram group or the live chat on any of the channels that we might be broadcasting on if everything's working. We've got about 20, which should be more than enough, that we've collated together from support and various other channels. And so Famida's just going to go through those, and I'll just start talking about each one by one until we hit the 1 hour mark for the Bank to the Future episode 21. So what have we got, Famida? Hopefully everyone can hear you now.
Yeah. Hi, Simon. I don't know if you wanted to join with your camera, or did you want to go through
let's try both. Let me figure this one out. So I shall stop sharing for now. Let me figure that one out. Okay, the red button there. And I shall switch my camera on. Okay.
Awesome.
And I'll share this one.
Cool. So I think the first one on the list is, what is an SPV?
Okay. So an SPV, and let me give some premise here. The way that we just sent out an email to, I believe, all of our investors saying that their finance is full of complete jargon, very intimidating to a lot of people. Technology is full of jargon, very intimidating to a lot of people, particularly techies. I come from a finance guy. I'm a finance guy that found technology. There's many people in crypto that were technology people that found finance. And when you combine financial technology, you have a mountain of jargon that's very intimidating for many people. And often you find yourself in a position where people assume you know things, but you don't. And you find yourself in a position where you're too embarrassed to ask because you think you should know. So that's kind of the premise of this episode of Bank to the Future Live. The first is SPV. Now, interestingly, the technology people are probably going to crucify me for my definition, but SPV has a double meaning, both in crypto world and in finance world. So SPV is a special lightweight wallet in technology world that allows wallets like blockchain.com to operate in a way whereby you can, so it's a type of wallet as well that was an innovation throughout Bitcoin's development history. But the term that we're trying to define here is special purpose vehicle. So I am going to share my screen, and I think you should be able to see both me and my screen if this is all working. I'm just going to move those. And a special purpose vehicle is essentially how we package up our investments without the companies that we raise financing for or make a market in their shares, without them having to be public companies because they're too early stage and they're not quite ready to go public yet. And the way that we do this is we put together a special company, and that special company, known as a special purpose vehicle, will hold shares in the underlying company. So let's take an example. Here's CoinFirm. CoinFirm is raising finance on Bank to the Future right now. Now, CoinFirm may not be ready or in a position to go public because it's too early a stage. And if they take on a set number of investors, or then they are considered a public company, which requires a lot more work and things that you need to meet, and a lot bigger burden in order to remain compliant. So what we can do is we've combined the best of venture capital with the best of sort of being a public company, but without having to go through all the burdensome things. And that creates both challenges in that, public companies have to give more disclosures. These are still private companies, but it creates benefits in that they can raise finance from a greater pool of people, like CoinFirm is right now and Kraken recently did. So an SPV is a special company that we'll put together. Now, rather than taking on all these investors and putting them on what's known as a cap table, which is a list of all the investors in a company like CoinFirm, they can just take on one investor, which is a Bank to the Future special company. Behind that company is lots of other investors, and then we can manage the process through our structure. Our investors sign an investment agreement with us, and then the SPV signs an investment agreement with CoinFirm. And that's kind of the secret sauce of magic that allows all this to happen. Now, what's important for you to know is we've got an FAQ, frequently asked questions, under the invest button. And it's worth having a quick read. And one of those explains exactly why an SPV structure is used and what it means to you. And you can check out here and get further details by looking at some of these FAQs. And we also have at the bottom of the website a support center, and in that support center we've also got a knowledge center, and in that knowledge center there's lots of different ways, but we've taken the top questions that we think are most relevant to investors and put them here just before they go on and view any of the investor page and the investor details. Remember, the details are here. You go to the investor page, and the investor page discloses more of the details that are important to people that are looking to actually make an investment. Check out those tabs, go to the FAQ, and then you can head over to make an investment, select your payment method, the amount you'd like to do. It will then go through all the terms, any of the contracts, and everything is there. And you can pay with the different payment methods that are displayed on this. And that's how it works. So in short, the short answer after the long answer is that an SPV is a special company that we put in the middle that allows you to invest in such companies. And then once later, if they end up qualifying on our secondary market, then you can buy and sell shares in the SPV, and it's backed by one share in the underlying company. In these cases, here.
All right. So the next one on the list, Simon, is what are stock options?
Okay, so another important thing is when you're looking over at a company, what we do is we have a company page with every pitch. So the pitch is the main investor details. And if you head over to the investor page, you'll see certain details that are displayed that relate to the company. And here is an example here. So CoinFirm has their own company page, but we displayed some of the details here. And one of the things is we disclose any stock options. So the important part about stock options is that options are essentially a right but not an obligation to give somebody a right but not an obligation to purchase shares in the company. If they go on to actually purchase those shares in the company, then that can have a diluting effect on the amount of equity that you hold, the percentage of equity that you hold within a company. Now, that's very normal. Most private companies have stock option schemes whereby they incentivize key members of staff by having, an employee option scheme or various other things, which gives their staff the right but not the obligation to purchase shares at a set price in the future. So there might be an option scheme to, for example, you get the right to buy shares in the company at $1 per share. And then the company goes on to make tremendous progress. Those shares are now worth $10, and you could exercise the share option, giving you the option to buy shares at $1, and you've locked in a $9 paper profit. So later, when the company exits, you tend to have lots of stock options which are exercised, and that creates a dilution effect on that. But the number of the percentage of stock options is disclosed so that you can understand the effect that it might actually have. Just to be, reiterate that, it's very common for private companies to issue stock options. And one of the risks when investing in a private company is that you can have a dilution, is that you can be subject to dilution. Now, dilution, I'll just add that term here because we've talked about it. It means that the company in the future, when it wants to raise more funding, it can issue new shares in the company. Now, obviously, if there's 1 million shares and they issue 1 million new shares and now there's 2 million shares, then you're subject to a 50% dilution. That's very normal. What isn't normal, what you want to do when considering how investing in private companies is you want to make sure that the company is progressing whereby the share price that they issue those new shares at is greater than the proportion that you're being diluted by. So in the example, if you invested in a company at $1 per share and there's 1 million shares, then the company is valued at $1 million. But then later, let's say they issue 1 million new shares, that's an extreme example, which doubles the number of shares in the company. And that is done at $10, then you now have 2 million shares that are worth $10 each, which means a valuation of $20 million. So the dilution is outstripped by the value that was created in the company. And also then you consider things like stock options as well, which are disclosed in terms of how many stock options the company may have issued already. So those are the things to consider when investing in private equity in many of the companies.
All right, so the next question is, what is capital gains?
So capital gains is something that we can't advise you on, but you need to consider, which is when you invest in a company or any asset or any crypto asset, and you lock in, you have a record of the price at which you purchased it. So let's say you're buying Bitcoin or a company. Let's say you purchased Bitcoin at $10,000 and then you decided to sell it at $12,000. Then you lock in a $2,000 capital gain. The capital gain is only realized once you actually sell the asset. And then depending on your jurisdiction, you need to actually pay capital gains tax, depending on the rules around your jurisdiction or where you are, and you need to file that on your tax return. But the capital gain is essentially the amount that you gained as a result of owning that asset. So, for example, many of people invested on the first pitch that we did for Bitfinex. And Bitfinex, when they initially did the funding round, people were able to invest into our SPV at $1 per share. But now, if they head over to the secondary market and they placed a sell order, and they sold it at the current price, and so I think the high price for Bitfinex was around about $16 or so. Now it's probably trading, I think, at approximately, or you could place a sell order at about $8 or $9. Then you would have locked in, depending on how many shares you have, a capital gain. If you purchased at $1 and sold at $10, then a capital gain of $9 per share, which multiply that by the number of shares that you hold, and that would equal your capital gain.
Okay, the next one on the list is asset allocation.
Asset allocation, interesting term, probably means different things to different people, but essentially it's the concept of having a diversified portfolio. So when investing in companies, the key to success is really, if you speak to any professional fund manager in the world, asset allocation is really their key to their success and survival. And what that means is essentially diversifying across lots of different risk factors and asset classes and assets and market risks and all sorts of things involved in portfolio management. But what's relevant to the crypto industry and the crypto investor? Well, firstly, many people just hold their wealth in Bitcoin, and one could argue that Bitcoin is the only shot that we have at achieving sound money, and therefore there is no diversified concept. Others would argue that you need a diversified portfolio across the crypto sector because it may not necessarily be as correlated as it is in the future. Another a concept is when investing in companies, crypto companies, do not put all your eggs in one basket. It would be a reasonable piece of advice. Can't give financial advice. This is self-invested, we don't give financial advice or on that, but some simple tips is that you don't want to put all of your money into one company. You want to be, and one of the things that BnkToTheFuture did is give people the ability to diversify across the whole industry. Now, many of you, one of the reasons we created the secondary market is that you could catch up on rounds that you might have missed in the past if the company has reached a certain level of success. So rather than just having to invest in CoinFirm, you could invest in CoinFirm, which is an earlier stage, higher risk, higher return type of investment. But you could also diversify in some of the more established companies in crypto, which may be closer and closer to an exit. And you want to have a pool of different companies that you invest in order to remain diversified. Now, one of the reasons that we work with qualifying investors, but people invest smaller sums in some companies, is because they want to build a large portfolio. So the crypto investor, they tend to be diversified across crypto equity through BnkToTheFuture, an asset class like Bitcoin, which kind of sits on its own, and then further diversification in different types of asset classes, whether that be smart contract platforms like Ethereum, or some of the competing platforms that are less established, or things like IEOs and tokens. In last episodes of BnkToTheFuture Live, we went through the history of ICOs, IEOs, how it differs from equity. But it's the concept, asset allocation, of determining how much of your wealth do you want to hold in things like cash or real estate, and how much of your wealth do you want to go into more speculative things, which then determines, based upon when you're going to retire, how much liquidity you need, and certain other things that people tend not to consider when deciding to invest. Then you want to allocate to a diversified portfolio, and that's the key to asset allocation and some of the different considerations. And then you can even go more and more detailed as you get into different economic risks, political risks, currency risks, and various other things.
All right, so the next one is, what does net worth mean?
Net worth, interesting, is just essentially your net worth of all of your assets. So you take all of your cash at a bank, all of your less liquid assets, maybe as real estate property, You sum it all together, your crypto assets, which are obviously you have to mark to market. So you tend to mark things in the currency of the country that you live in, or you pay taxes in, or you reside in. And you would mark your crypto assets. Because they're very volatile against fiat currencies, it changes frequently. And you would take all of your assets, mark them to one particular currency, and that would give you a value of what you're worth. And so in the relation to Bank to the Future portfolio, one of the really important things that I know investors have given feedback on is when you head over to the portfolio section of your account, we used to have a pie chart which you can use in order to gain an understanding of the different assets and their value at the moment. But we had to take that away because we went through a migration in order to launch the secondary market, to converting all the assets into things that could be bought and sold on the secondary market. But in future releases, certainly this year, and when we show you a roadmap, you'll be able to go to the portfolio section and have a real clear pie chart that gives you the estimations of what things are worth, so that you can then add that to your net worth calculation in determining how much all of your assets and all of your wealth is worth at a particular moment of time. Couple of challenges with that. When dealing with private equity, it's very hard to price the company. When you don't have a price, but you know the number of shares, then it's hard to calculate your net worth. So one of the things that we do is we use the price of the previous funding round as a pricing event. And one of the goals in creating a secondary market is that the market can determine the prices at which they're willing to buy and sell those assets. And therefore, it gives you an indication of what the market is currently looking to buy and sell those assets, so that you can then have a better gauge of pricing. Pricing could be a number of things. It could be an estimate of the current value of the company, very hard to do. It could be the price at which somebody last paid for it, which is a pricing event, i.e. a funding round. Or it could be the value of the SPV on our secondary market. And those are three different data points that you need to figure out what you would use in order to add to your net worth calculation when figuring out what all of your assets are worth. We appreciate that our tools are not good enough at this moment, but it's certainly in the roadmap, and we look forward to releasing things that make it easier for you to calculate your net worth based upon your portfolios in Bank to the Future.
All right, so the next one on the list is, what are dividends?
So dividends is a term that refers to owning shares in a company. A company is allowed to pay a dividend if it made a profit after paying tax. And so a company could make X amount of profit. Let's say it made $10 million in profit after sales. It then paid, let's say, $1 million in tax, and there's $9 million profit. Now, a company has two things that they can do with that profit. They can either reinvest it in the company growth, or they could decide to spend it in different ways, bring on more key personnel, grow, acquire different assets, do different things that the board of directors determine are good things to help grow the company. Or it could decide to pay it out to shareholders through a dividend. And what a dividend means is that anybody that owns a share in the company that's entitled to dividends will receive a set amount for every share that they own. And so how that works on Bank to the Future is, for example, I use the Bitfinex example again, but Bitfinex is one of the companies that chose to take a large percentage of their profits and pay it out in dividends to shareholders. So the way that would typically work is Bitfinex would pay our SPV the dividend, and we would receive it on behalf of all the investors that own shares in the SPV. Now, the way our model works is investors do not pay typically to invest. In some deals, we will disclose when the company's not paying a fee, and we'd have to charge a fee onto an investor. But if you check your investment agreement, an investor pays 5% of any exit proceeds or dividends distributed to them through our platform. So Bitfinex would pay a dividend to the SPV, and then through our platform, we'd actually add that to the fund section of your account, which you can then withdraw minus our 5% fee. And so you get a share when a company pays a dividend, And you get that for every share that you own in the SPV, which is backed by one share in the underlying company. And so a dividend in its simplest terms is essentially the company, the board of directors of a company, deciding that rather than reinvesting in growth, they're going to distribute it to all shareholders. But it's very rare that that actually happens. Dividends normally happen to established public companies, and most private companies, remember, it's not really, if your dividend is a way of what they call income investing versus growth investing. Growth investing is where you're investing for capital gains, which is share price increases. And investing in an early stage company is typically looking for huge gains in share prices. You know, on a public company, you'll be looking for maybe 5 to 10% gain in a year to beat inflation. But in a private company, you're looking at a long-term investment where you're trying to achieve maybe a 10x return, or even greater, depending if the company goes on to become a unicorn and you invest in an earlier round. And most of the time, private companies like to reinvest all of their profits, if they have them, into growing the company, maybe like Kraken, for example, looking at doing mergers and acquisitions with their profits and growth, rather than paying those out as dividends. So dividends, income generating assets, private equity is not really a common way of doing that. Most people are investing for capital gains rather than income, and dividend is a form of income rather than a capital gain. So those are the things to consider in terms of dividends.
Okay, so the next one is a share split. What does that mean?
So this is an interesting topic right now because we're actually going through a share split. So our SPV owns shares in a company that's going through a share split right now, which is Coinbase. And Coinbase, what happens in the stock market and finance frequently is some companies have such a high share price because their company has grown so much, and you can't buy fractions of shares. On BnkToTheFuture, you know, one of the advantages of tokenization with securities tokens is that you'll be able to buy fractions of shares. So this becomes less of an issue within the security token space. But in the traditional equity space, what tends to happen is if a company grows so much, their share price becomes so high that the price to buy one share might be, an example of this is Berkshire Hathaway, which is the public company that Warren Buffett uses to hold all of the assets. Now, I haven't checked it for a long time, so I could be completely wrong, but I believe it costs like $300,000 or something huge to buy one share in Berkshire Hathaway, which means that everyday investor that doesn't have $300,000 to buy one share cannot buy shares. So what a company would typically do is they would do a stock split, whereby the share price has gone up so much that they would essentially split the price in half, for example, or split it by 6 times, but give you 6 times as many shares. So you get 5 times more based upon your original shareholding. And the share price would come down. So at the moment, we've suspended the Coinbase secondary market because all of those that own shares in the Coinbase SPV will have a lot more shares, but at a lower price. And we're going through that process at the moment. And so essentially, it's just reallocating the share price of the company and issuing many more shares so that they balance it out in the end, but they don't want to have a restrictive share price that prevents them from, you know, when they go public in the future, for example, being at such a high share price that it restricts many investors from investing in things like the public markets. So that's a stock split.
Share split.
Share split, same thing. Stock split, share split, equity split. What you'll find is that there's many different words for the same thing. That's why there's so many problems. For example, asset allocation could be fund allocation, could be lots of different terms that they use in finance. Unfortunately, it's different words in America, Canada, US, UK, various different jurisdictions. And then you've got all of the non-English speaking jurisdictions. They all use different terms.
Okay, cool. So the next one is dissolution.
Dissolution. Not sure how that relates to crypto investing, but it might be referring to when a company decides to liquidate and go bust, and the process that they go through. But
I've never actually heard of this term before, so.
Okay, yeah. That's one I'll pass on, I think, because we haven't encountered it, and it might be an Americanism for a different term, but I'll definitely check it out, and we'll pass on that one.
Yeah, okay. Rebalancing.
So rebalancing is a financial term that people use in order to, when they're calculating their asset allocation. An example of this is many people invested in one of our companies, which is called Bitcoin Capital 3, very early stage company, and it invests in lots of different companies in the crypto sector. We had a situation whereby some of the assets that were owned by Bitcoin Capital 3 weren't worth much. It held a load of Bitcoin, which became worth a lot. And it also owned shares in Kraken, for example, which became a unicorn and went from an initial 100 grand investment, became multiple millions. And what happened is the percentage of Bitcoin Capital 3 that the percentage of the value that was consumed by Kraken shares meant that it was a completely unbalanced portfolio. And this tends to happen in private equity. So what venture capitalists tend to do is they'll invest in 10 to 20 companies, and one of them might go on to become a Coinbase or an Uber or a Kraken. And then they have an unbalanced portfolio whereby the value of one of their companies is worth a lot more than the other 19 companies. And so rebalancing refers to the process of liquidating some of those proceeds and then diversifying the portfolio further. And that relates to the asset allocation, where you might take some of it out of private equity, or you might decide to rebalance your portfolio by investing in many more companies based upon returns as they realize, because the percentage value of that particular asset is dwarfing the value of the other assets, and you become unbalanced.
Okie dokie. So the next one we have here is parent company.
So parent company is important because many companies, for example, BnkToTheFuture ourselves, we have a parent company, which is a company that holds equity. And then you might have different institutions. For example, BnkToTheFuture is registered with Cayman Islands Monetary Authority and has to adhere to certain rules there. But we might have different companies that are regulated under different jurisdictions and different regimes. But they are part of the same group of companies. Coinbase is another example. They have Coinbase Custody. They have the parent company, and then they have lots of different subdivisions. But essentially, the parent company is the one that owns all the value or equity in the different companies. It might be done in a number of ways. They might have an option to purchase those companies when we talked about options earlier, or they might actually own the equity in those companies. And so what you're looking for really when investing in private equity is you're hoping to invest, either understand, clearly disclose that you're investing in a subsidiary, a sister, or a child of that parent, or you're investing in a parent company which gives you beneficial interest via the SPV in all of the subsidiaries and different companies that sit underneath it.
Right, so the next one on the list is, what is an escrow?
So escrow is a way of giving additional protection to investors. So the way that it works on BnkToTheFuture, for example, is you go to the page and each pitch has a minimum funding goal. I don't think I can't remember if I am still sharing my screen. So you'd go and the pitch might have a minimum funding goal. And if the pitch does not reach that minimum funding goal, then we return all the funds to investors because it didn't reach a certain goal. That goal is disclosed on the pitch. But in the middle, rather than us holding the funds or the company holding the funds, you can have an escrow that holds the funds. And essentially they're an independent, appropriately regulated institution. And there's different requirements in different jurisdictions depending on where you reside, that essentially holds the funds on a set event happening. So for example, with BnkToTheFuture, we could say CoinFirm reached its minimum funding goal. We have signed all the terms and agreements. The investors have signed up to our investment agreement. We've completed legal work with CoinFirm. Please release those funds to the company. And so, for example, if CoinFirm, something broke down in the deal and we didn't end up signing the agreement, then the funds via the escrow agent could be automatically returned to investors, and it offers additional protections in the middle. That's why sometimes when you pay, for example, with bank transfer via our platform, it's done via an escrow agent, and therefore there's an additional fee that we have to pass on, because we do pass on all third-party fees in order to be able to deliver that service. And that's why an escrow agent will provide a fee for delivering that service of holding money in the middle in case something goes wrong or it doesn't reach its goal or something like that. In terms of crypto world, there's lots and lots of really interesting innovation happening where you can fully programmably do an escrow agreement via a smart contract, whereby you never actually need a third party in the middle, and you can have a smart contract that knows if a moment of truth occurs and an oracle happens, then it can automatically transfer from one wallet to another wallet, because crypto is programmable money. So these different types of things and multi-signature arrangements are one of the big use cases in crypto to prevent the need for an escrow agent, or have at least an escrow agent that's just a robot that sits in the middle.
Okay, so the next one we have here is...
I think this is going to be the final one, because we started 5 minutes late, so... Yeah,
you're right. The next one would be shares on premium.
Okay, so shares on premium and discount. So let me show you an example, which is, so for example, what we have, this concept at BnkToTheFuture exists when the SPV is trading at a different price to the underlying equity. The underlying equity is, for example, we have an SPV that might own shares in, I keep giving Bitfinex, but it's the easiest one because we've got so much data for it. It would own shares in Bitfinex. The last pricing event was $16, which is a reported trade. I think it was 16, yeah. A reported trade in the direct equity where direct shares were disclosed as being transferred at that price. So because it's illiquid and it's Bitfinex equity doesn't have a live pricing, the last price is the last price that someone was willing to pay, which was $16. Now, if you look at the SPV is backed by shares in Bitfinex, and it's currently trading at about $8 or $9 or $11, depending on who you buy from on the secondary market. That means that it's trading at a discount to the last trade of the underlying equity, which means that the SPV is discounted to the underlying equity. It could also trade at a premium, whereby it trades at a greater price and people are willing to pay more for the SPV. This creates an interesting arbitrage opportunity, because if Bitfinex is worth $16 per share and it exited and was acquired or went public at that price, then it doesn't really matter what the price of the SPV is, because the exit would happen at $16 per share and people are buying at a discount, and that would lock in essentially a capital gain between when we distribute the funds via the SPV to the underlying equity. And so because we got a price for the SPV through our secondary market, because we've got a marketplace, OTC marketplace, of people willing to buy and sell. Let's put another jargon in there, OTC, over the counter. Sometimes you have to slap me in the face and remind me that I'm using jargon, because it just comes as second nature and I forget I'm using it. Over the counter means you're putting together buyers and sellers via our online process, and this is an over the counter market without some kind of automated trading, multilateral trading feature in the middle. More jargon, sorry. But that's how it goes in finance, I guess. But yeah, well, I've lost my trail of thoughts. Discounts and premiums, yes. So a discount, so you could, because the SPV has a live price because of the market, and the underlying equity is an illiquid stock that is not public yet, or is not exited yet, or been acquired yet, then you can have a discount or premium to the underlying company based upon, an investor might just need liquidity. So he's willing to sell at a discount because he needs the funds to either rebalance their portfolio or do a different asset allocation, and many different things. So different people have different needs at different times. Maybe they just need to realize some gains in time for a tax year or something like that. So that causes someone to want to sell at a discount and someone to be willing to purchase at a discount to take advantage of that discount or premium. So I hope that was useful. Even if you're very familiar with these terms, maybe my perspective and how it relates to Bank to the Future was educational and helped you make better investment decisions. Obviously, as none of this is financial advice, it's just meant for educational purposes only. Bank to the Future allows you to build a portfolio of companies that are all involved in financial technology and changing the future of finance. I'm going to stop sharing my screen for the outro. Let's see if I can do that before we finish. Oh yeah, I've got to press that button. Okay. Do let us know. Please do, if you enjoyed this, please like it, please share it, please retweet it, please do whatever you do on Facebook now, whatever you can do to help us spread our content to reach more people. As we shift on what we think is the disruption of a multi-trillion-dollar industry, as traditional finance gets disrupted one product at a time by financial technology, the crypto industry. That's going to do it for episode 21 of Bank to the Future Live. Thank you to everyone who put this together. Thank you to Famida for picking out those terms and moderating. And we'll see you at the very same time next week, hopefully. Everything worked here and the internet was good and it worked on all these different platforms. Give us your feedback. Please do. We'll try and go back to these comments. Please do like, share. Remember, if you want to be notified of this every time, subscribe to our channel on YouTube, hit that bell button, and you'll get a notification every time we go live. And I'm just going to have to figure out how to end this broadcast. Over and out.